This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The Biden administration will seek up to 6 million barrels of oil for the Strategic Petroleum Reserve, a source familiar with issue said on Tuesday. A purchase that, if completed, will match its largest yet in the replenishment of the stash after a historic sale in 2022. The administration will announce the solicitation as soon as Wednesday to buy oil for delivery to the Bayou Choctaw site in Louisiana, the source said, one of 4 heavily guarded SPR locations along the coasts of that state and Texas. The U.S. will buy the oil from energy companies for delivery in the first few months of 2025, the source said.
Oil prices steadied on Wednesday, after rising in the previous 2 sessions, as investors await the U.S. Federal Reserve's anticipated interest rate cut, with the potential for more violence in the Middle East supporting the market. Brent crude futures for November dropped 3 cents to $73.67 a barrel at 0053 GMT. U.S. crude futures for October slid 11 cents, or 0.2%, to $71.08 a barrel. Both contracts gained by about $1 a barrel on Tuesday on lingering supply disruptions in the U.S., the world's biggest oil producer, after Hurricane Francine, and as traders bet that demand may increase following what would be the Fed's first interest rate cuts in 4 years.
Moving on to the top news in the energy sector.
Asia's ultra-low-sulphur gasoil refining margins collapsed to the lowest in nearly 3 years, pricing data from LSEG showed on Tuesday, as excess supply and persistently soft derivative markets depressed prices. The margin for 10 ppm gasoil, a fuel used in transportation and industries, slipped to slightly below $11 a barrel, down from $11.50 a day earlier, the data showed. The decline was further exacerbated by the strength in crude prices, in comparison to gasoil, given that derivative prices have been holding steady the past 2 trading sessions, one Singapore-based trade source said, adding that there is still more supply than demand in the market now.
The Indian government has cut the windfall tax on petroleum crude to zero from 1,850 rupees per metric ton, effective from September 18, a notification issued on Tuesday showed. The Indian government reviews the windfall tax every fortnight, and the cut comes after a significant decline in crude prices. Global benchmark Brent crude prices have fallen to below $75 a barrel from over $92 a barrel in April. Next, we have the top news in metal markets. The U.S. government is probing whether China is supporting Russia's nuclear industry by importing enriched uranium from its neighbor and exporting its own production to the U.S., which recently banned Russian uranium imports, Reuters has learned. U.S. House lawmakers passed the ban on Russian enriched uranium in December 2023 as part of a U.S. effort to disrupt President Vladimir Putin's ability to fund Russia's war on Ukraine. That month, shipments of enriched uranium from China to the U.S. shot to 242,990 kilograms, 535,700 pounds, according to data from the U.S. International Trade Commission. The imports are significant because from 2020 to 2022 China did not send any enriched uranium to the U.S.
Iron ore futures prices slumped on Wednesday, as Chinese traders returned after the country's Mid-Autumn Festival holiday to a bleak market outlook for the key steelmaking ingredient, weighed down by prospects of firm supply and soft steel demand. The most traded January iron ore contract on China's Dalian Commodity Exchange ended morning trade 4.33% lower at 673 yuan and 50 fen, $94.91, a metric ton. The benchmark October iron ore on the Singapore Exchange was 2.18% lower at $90.20 a ton, as of 0331 GMT. Goldman Sachs on Monday cut its iron ore price forecast for the fourth quarter of 2024, citing market oversupply even though demand from China is stabilizing.
We will now look at the top news in the agricultural sector.
France's Farm Ministry on Tuesday again lowered its estimate of the country's 2024 soft wheat output, now expected 27% below last year's volume, making it one of the worst harvests in the past 40 years in the European Union's largest grain grower. Wet weather since last autumn in France has delayed plantings, hurt plant development and increased crop disease, prompting observers to regularly cut their grain crop estimates. The ministry lowered its estimate of the 2024 soft wheat crop to 25.78 million metric tons from 26.32 million last month and the lowest volume since 1986.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.